Good afternoon. This is Sean Golding with Golding and Golding, here to discuss the IRS requirements for U.S. persons who are receiving gifts from foreign persons. So, a common situation is there is a U.S. person in the United States, even if they're outside of the United States, but um, maybe they're here on green card, or maybe they're a U.S. citizen with a relative that lives overseas that's a foreign person. Maybe they just graduated from school in the United States. They were on an F1 visa. Now they're on maybe an H1B, and they receive a gift from a foreign person. Now, one key distinction is that it doesn't have to be foreign property, but the gift has to be from a non-U.S. person. There's also some more complicated rules regarding expatriation and foreign gifts from former U.S. persons, but we're not going to deal with that today. We're going to stay focused on the basics. So, when a person who is a U.S. person, generally that means U.S. citizen, legal permanent resident, or visa holder or foreign national that meets the substantial presence test. We're not talking F1 that has a 5-year grace period. We're talking more like H1B, L1, E2, E3, O1, what else we got? EB5, and several others. So when this type of person receives a gift from a foreign person, whether it is a foreign individual, a foreign company, or a foreign trust, there may be some reporting requirements. So why don't we go through the basics? Generally, it's going to be reported on what's called the Form 3520, Annual Reporting of Foreign Gifts. If the gift is from a foreign individual, it's generally the most simple reporting. You don't even have to provide the name of the person that gave the gift. If there was a gift from one person, either a single gift or a series of transactions in the same year from the same foreign person that exceeded $100,000 in that year, it's reported on Form 3520. If it's a gift of $180,000 or 10 gifts of $15,000, it's still going to cross the threshold as long as it's within the tax year. When the gift comes from a foreign entity, it's a little different. You have to identify who gave the gift, and the amount of the gift generally has a much lower threshold. Currently, it's around a little less than $17,000. So, individual is $100,000. If the gift comes from a foreign entity, about $16,000 and change. If the gift is from a foreign trust, the reporting gets even more complicated, more complex, and there's no minimum threshold. So any distributions from a foreign trust generally has to be reported. What's considered a foreign trust is always up for debate. A recent revenue procedure code came out that kind of touches upon it and references the 3520. It's more focused on the 3520A, but it is revenue procedure, or what people call RevProc 2020-17. So the big question, what happens if I don't file the 3520 timely? Do I get hit with penalties? And generally, yes. And unfortunately, the IRS has significantly increased enforcement of this particular penalty, which is odd. Because, when someone has foreign accounts, assets, investments, income overseas, it would make sense that they would get into the reporting, understand it over time, and have significant or substantial reporting for each year. You got 5 bank accounts, maybe an investment account, maybe you're part owner of a foreign business. Gifts could be a one-time thing. Depending how lucky you are, I guess it can be, one time per year, several times per year. But for many people who come to us, it's a one-time gift. Someone graduated medical school. They might be from Taiwan, India, Australia. The parents gave them a gift so that they can purchase a home, and the IRS turns around and issues them a penalty. That penalty can be severe. Most of the time when people come to us, they received what's called a CP15 notice, and the penalty is 25% value of the gift. So someone got, let's say, a $900,000 gift from their parents overseas to help for a home because they just graduated and they don't have enough credit or whatnot to qualify for a mortgage. Well, that's a $225,000 penalty. How do you get into compliance? So the 3520, generally, if there's no unreported income, there can be delinquency procedures. excuse me, or reasonable cause submission. There's always the streamlined program depending on the facts and circumstances. Oftentimes, people will come to us, and the foreign gift non-reporting is just one aspect of non-compliance. If somebody is listening to this and they've already received the CP15 notice, then it is crucial that they respond in that time period. Generally, they provide 10 days. Even if you don't respond within those 10 days, there is some stuff you could do on the back end with the collection due process hearing and then take it to tax court possibly, but you really don't want that. 99% of the time, the most effective route is the one that goes through the IRS Office of Appeals to start. That's the introduction to reporting gifts from foreign persons. My name is Sean Golding with Golding & Golding. We have extensive information on our website, goldinglawyers.com. Thank you for your time.